Greetings, Dr. Jeffrey Scott, and this is my weekend market update for the week ending Sunday, October 6th. Glad you could join me for this. I record these sometime over the weekend and post them when time allows. And because I've got a football game I'm interested in tonight, a rematch of the NCAA championship from this past year, I'm getting this done earlier than I normally do since it's a rematch of my alma mater, Michigan versus Washington. Just get the deck set up here. Perfect. Hit the swap. And is this the problem I'm having? All right, so I've had an issue with the mouse and not showing on the right slide, but I guess I can do it if I do this way. So I'm going to have to do it with a little bit less than full screen mode because it's taken me a half hour. I've rebooted everything and my mouse was not behaving. So I titled this week's session, Will Markets Rally on Strong Jobs Report, Our All-Time Highs Next. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. I will respond to constructive criticism, positive and negative, or any other questions, whether you put them in the YouTube remarks section or you email me. If you're new to my channel, look for that subscribe button on my YouTube page, and that way it'll serve up automatically in your feed. And if you hit the alarm, you'll get notified when I put these things out. So thanks for being here. Let's take a look at what I'm seeing in the market. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. I pay for the tools that I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. If you like this video, I invite you to come see the daily video at stocksanddocs.com. When I'm not traveling, I will do these every day. When I'm on the road, not so much. Speaking of on the road, I have a very big vacation I'm taking starting next weekend. It is very likely that there will not be a weekend video until we get to November. My wife and I are now negotiating whether I'm allowed to bring one computer or none. So I kind of know where her heart is, and she's a great woman, married to her almost 40 years, and I'm going to do what she tells me to do for once. Major markets tell the story. You could see if you look at Friday, Friday felt like a really strong day. But the interesting thing is you look at the whole week and you could see the Dow, the NASDAQ, the NYSE, the spiders are all only up on the 5 days about 0.3, and the Russell was down 0.5. Now, of course, you look at Friday, the Russell was up 1.4, the Dow 0.8, Q's 1.2, the composite 0.8, and the spiders 0.9. So a bit of a rally per se, but all it did is bring us back to kind of flat on the week. What led on the week? Oil, probably the Mideast tensions, up 8.7. The dollar showed some strength. FANGs were up. This is a 3x, so probably not nearly as much as this appears then. IBD ETF, IBD 50 ETF, 50 was up 1.3. You can see the MAGs were up 0.3. So kind of a flat week outside of oil. If you look at the 5 days on the sectors, energies, financials, utilities were the big leaders. And I'll tell you, financials are, when I went through my weekend video, what really popped up was KIE, which is the insurance companies, KRE, the regional banks, and also the big banks looked interesting. I'm sure we'll look at a number of them as we go forward. This is the Q-Edge tool. It gives me a sense of how the markets are doing. Now, it's important that you realize this is not looking at the S&P 500. It's looking at the 1500. So it includes things from the large cap 500, mid cap 400, and small cap 6. On Friday, all the sectors were up on all the industry groups, or 80% of the industry groups and 78% of the stocks. That's a very bullish day. Interestingly, when you look at stocks below the Bollinger Bands, they actually increase some. 59% of the stocks in S&P 1500 are above the midline, so that's bullish. So this is not a bearish picture. If you look at 5 days right here, you can see it was a rougher week. Looked a whole lot better from the industry sectors and stocks on Friday. And if you look out over a month, we've been in a pretty strong period of the market despite um, the early part of this current week. Now, what's interesting to me, and I know a lot of people, myself including, make comments about you don't short quiet markets. We've had a quiet market. Notice how we've had very little movement. This is a composite of the NYSE and the NASDAQ, um, below all-time highs, but approaching it. But notice there's been nothing firing down here. There's been no accumulation or distribution. There's no color of these bars for a Eureka or a Phoenix. There's no Hindenburgs, anything that says much is happening. So very quiet market, and you always got to be careful shorting a quiet market. If we look at the NASDAQ on the left and the NYSE on the right, you could see that the NASDAQ is not close to an extended area. This is the area of concern. This is a 13-week new high, new low. But the NYSE is starting to get to a place where breadth is starting to get extended. Many new highs versus new lows, something that we might want to watch. If you look at stocks above the 50, stocks above the 200 in yellow, 50 above white, and the 50 above the 200, a little bit of improvement on Friday as well. And when you look at the more broader indexes, you can see the Dow not quite extended by the 13-week. Russell looks okay. NASDAQ 100 looks okay. But the breadth of the S&P 1500 and the S&P 500 are both approaching, that 3-month or 13-week new high, new low, getting into areas that often are associated with reversals. So in some ways, in some indexes, but not all, breadth is becoming a little bit long. Now, I've moved to this tool, which I had my buddy Praveen create for my new product that we'll be launching at some point, because I wanted something that I could track various things. Up in the left-hand corner, I'm looking at the one-day close, and you can see they're green across the board. The leader was IWM up 1.41, the Q's up 1.19. You could see percentage change from the open, so the spiders and the diamonds actually traded up from where they opened. You could see a percentage of the stock price or industry price, the range was, and the biggest range was in the IWM and the Qs. And you could see here in the closing range, where the higher the better, you could see that even though the Russell led the IWM, it did not close up near the high. Over on the right, we have new highs and new lows, and that did not look so good. So how is it possible? This is a concern I might have, where overall the markets did well, but we're not making new highs, and that's something that maybe puts a little bit of a question in there. When you look at the one-day change in the S&P 500 sectors, you could see financial 1.69, 1.32 on discretionary, 1.1 on communication led, and the laggard was real estate. Probably higher rates did not help that. You could also look at 5-day, 200, 20-day rather, and 50-day change. And you could see on the closing range, financials closed near the top of the session. And then I've got a number of other ETFs, so lithium, China consumer, China internet, transformational data sharing on the one-day change were up there. And you could see when you look at the 5-day, there's some rotation here out of some very weaker names. The big laggard in my list was interesting, was the Southeast Asia ETF. Now this, to most of you, will look like my weekly market timing, which it is, with 4 indexes and prices above the yellow, which is the WMA 30 period, and this is a weekly chart. And you'll notice up at the top, the spider bongo turned blue again, or became bullish. The Q weekly bongo remains bearish, and both the Russell and the spiders remain bullish. This new line here I was able to program into this view, and it shows whether you're in a buy or a sell. And the Russell, the diamonds, and the spiders remain in a weekly buy signal. If you look at the rates, they actually turned up, especially on Friday with a really strong employment situation. We'll see if that's a one-day wonder. That's not great for the housing. Mortgages popped on that news, and the likelihood of a 50 basis points cut from the Fed came down. Um, but another way of looking at it is if you look at how they raise rates and the impact on the market, NDR Research did some great analysis, it's something I subscribe to, and they showed that when the Fed is slowly cutting because the economy hasn't cratered, almost 100% of the time a year later the markets are higher. So we're cutting in the setting of a non-imploding economy. So maybe, unless we get a spike in inflation, and that's something to think about this week, we got the CPI and PPI, that if inflation stays tame, that soft landing sounds like it might be in play, and that could lead to higher highs. Is there a recession in our near future? Do the Fed engineer a soft landing? We'll see. We had the reversion of the inversion on the 10 minus 2 year. 10 minus 3 is trekking higher. We are above the minus 20 on the Philadelphia Diffusion Index of activity, and there's no evidence of tightness, which you'd expect to see during or before a recession. Now, stocks above the 200, stocks above the 40, and overall the 13-week new high, new low relaxed. Now, this is on the entire market where you can study them on individual indices. My history is with this entire market and on a weekly chart, but I'm actually testing this out now on various indices. As you saw with Sagar's slide, buckets, as we also saw, 59% above the midline, that's bullish. Not many below the bottom of the Bollinger Bands. Here is another way of looking at the Bollinger Band buckets, and this is the NYSE, the NASDAQ, the Russell 1000, and the S&P 1500. And what we did is we created the same basic methodology below and above. The thin white bar around it, that was the prior days. So again, this unusual theme that even though we had really nice number of stocks up versus down, when you look at these indices, we actually have more stocks weakening towards the bottom of the Bollinger Bands than getting higher at the top. So it'd be interesting to see how that plays out. We saw fresh indices on the NASDAQ this week. Now the new lows actually improved. There's no new lows on the NYSE. Remember, 1 out of 4 Hindenburg-Ullman signals is correct, and there's a pretty significant pullback. Many of them are just sideways moves or slightly down. So right now, my premise is this is going to be one of those minimal moves. Now, when I look at the performance versus ERG combines EPS rank, relative strength rank, and group rank. There was a spike of things in the low ERG, and my guess is those were the Chinese stocks that continued their rally, at least in the beginning of the week. But overall, it was a relatively flat market. If you look over here are a number of lists that I track on a weekly basis. And similar to last week, somewhere in here are my holdings, which would just be an equal weighted thing. They would have been up 2% if I had an equal weight of each one and kept them the whole week, but it was a 50-50 week. So even stocks and groups moving to the upside, which was up 2.5%, have more losers than winners. You could see growth was better this week. The IBD 50 was up almost 1%. Somewhere in here is the market surge. Market Smith was up 0.5%. So, a modest week, but plenty of stock groups headed higher. Know your news and earnings. All these arrows on the left represent talking Fed heads. What do you think they're going to talk about this week? How great the employment situation is. The fact that the economy is heading towards a soft landing, and probably going to talk us down from a 50 basis point cut at the next meeting. But hey, the market's already discounted that to zero likelihood. But then on the right, you've got some data that might matter. The minutes, it'll be interesting to hear if they're more bearish or bullish than was perceived from the speech at the last meeting. But we've got CPI on Thursday, PPI on Friday, so this still could be a relatively volatile week. And over on the right, you could see not much in the way of earnings, but we do start the next quarter. There's Delta on Thursday, JP Morgan, Wells Fargo, BNY, as some of the banks that report on Friday. As it says in the lower right-hand corner, it is a judgment call to hold stocks over earnings dates. It's just bad judgment to not know when your stock's earnings date is scheduled. So we traded lower most of the week, and then we bumped up at the end on the better data. We had to deal with some tough geopolitical news. We moved on from exploding cell phones and beepers to now we had over 200 ballistic missiles fired at Israel. So now everybody's wondering how much retaliation is. Is it, the retaliation by Iran probably was greater than expected. And let's see what Israel does. But that's going to spike oil, as we saw, and probably will keep the markets in check. So we closed fractionally higher on Friday, which saved the week. It was that employment situation, which had rising rates and falling bond. No more 50% basis point expectations. Soft landing expectations go higher. We still have issues. I showed you the Hindenburg. Rising rates could bring new concerns. Not good for mortgages. However, it really feels like the markets want to go higher. I'm long. I expect further gains. I'm resisting the all-in mentality and not using margin here because, it's a tough market. And even though it's tough to short quiet markets, it doesn't mean that we couldn't correct from here. So market timing supports being long. I am long. I didn't talk much about the Wealth 365 event because I planned a big vacation before I knew the date that they'd offer me to speak, and I'll be in the air, so I passed on this meeting. Still very much a big fan of wealth charts and the Wealth 365. And if you haven't registered, why don't you use my link, show them that I still care, and I'll put this in the notes section on YouTube. Special edition around the election, give us some insight into what to expect. And again, as I mentioned earlier, I do something similar to this, although much shorter, on a daily basis at www.stocksanddocs.com. All right, done with the PowerPoint, and let's pull up wealth charts. So let's start with the intraday charts, and this is a 5 minutes of the spiders. The market closed the prior week right here, so this will be the 27th, and this would be the 30th. So this line shows the prior week close, and you could see we started Monday and Tuesday and the beginning of Wednesday doing a bit of a downtrend. We went sideways on most of Wednesday and Thursday, and then Friday we had that good news on the employment situation, big spike at the open, pullback, but closed at the highs of the session, or just off the highs. Took out the prior week high, so we're going to have a positive week. If we look at the other major indices, they all seem to be running together and not a big difference among them. If we look at the daily spider, you could see we are running in this trading range here. This is, I believe, I don't think it's a prior high. I'm not sure what this represented, but I think we could probably kill that line. So we are in a trading range. We've got support under here, the 50. I think as long as we're in this trading range or break above, I'm going to stay long, but I'm closely watching this, and we've been bouncing around, and that is only about 7 S&P points, so it's a relatively narrow trading range. If we look at the weekly performance on the spider, you can see it was up just a bit, 0.26, but a bullish configuration nonetheless. If we look at the Qs on the daily, you could see they're off their highs. Maybe a little bit of a flag in here and a nice trading day on Friday. The candle's red, but if you look at the difference between open and the close, not a big difference. So that's kind of a hammer looking, breaking out of the flag. I could perceive that as being bullish. If we look at the weekly on the NASDAQ, on the Qs, you could see a breakout on the weekly as well. And again, traded down during the week, closed up just a bit, 0.12%. The diamond on the daily charts, if we look at it here, just off all-time highs. Also like the spiders in a relatively narrow trading range here for the last couple of weeks. And if we look at it on a weekly chart, let's just duplicate it, pop it up here, and then let's change that to weekly. You could see, like the others, up just a bit, 0.11. Probably the one that might be a little different than the others is the Russell. And I agree with something I heard on the TV. Um, this kind of started as a flag, but when is it not a flag? And it was a pretty deep pullback, but we bounced off the 50, which is where you'd want to beat. Had a strong day up 1.40 on Friday. And if you look at the weekly candle, you could see clearly an area of consolidation here. And we were down 0.5% this week on the Russell, which was the laggard, as we've already talked about. If we look at volatility, let's just look at the weekly VIX. And what do you see? Despite the markets being up a bit, the VIX was up 5.02%. Is that being driven by what's going on in the Mideast? Maybe. And then perhaps a flight to safety response. The dollar was up 0.56. And if we look at the dollar on the weekly using UUP, the dollar had a big week up 2.14%. So if the dollar continues to rise, it could ultimately impact on commodities and probably not the greatest thing for the U.S. stock market. That said, it's still well off its highs and right now not too problematic. Commodities, kind of looking like the indices, sort of narrow range bars flat at the top on gold. Silver a little bit longer legs, but closed kind of flat up 0.7%. This was the response to Iran, big gap, or not big gap, but big move up in oil and up 0.82 on Friday. Let's bring that 10-year in. I should be seeing that, so I don't know why it's not there. So let's look at that again. Doesn't really matter. We already looked at it and we showed you that. See if that comes. Oh, there you go. That's a different ticker. And you can see, like the dollar, the 10-year is somewhat breaking out here, was up 3.41. And let's just look at what the yield did on the week. Up 6% on the week. So rising yields, rising dollar, going to pressure some things. I think interest rate sensitive stocks such as real estate and home builders might be pressured a little bit. We saw weakness with them on Friday, but it's probably good for banks and insurance. And maybe that's why the KIE looks like a leading index right now. We already talked about the market timing. If we look at the sectors of what we're seeing in the market right now and look at last week, so materials drove, I think, on the China and then gave it up. Communications is looking better. Energy with the spike in oil looking better. Financials overall, okay, but let's do this. Let's duplicate the chart. Let's stick it up here. And let's type KIE in, KIE. And let's use the built-in KIE. You can see that. And now let's add the spider, SPY. And let's do it in the one-to-one. And you could see it's not at the top because it had slowed down but moved up as well, the KIE. If you look at industrials, came back a little bit, so I might take that away. Technology, not much. Staples and real estate, two of the defensive, not doing much. Utilities gave up a little bit. Discretionary, discretionary is holding okay. And then healthcare and biotech are kind of weak. So I guess, is there a real standout here? No, but I think the standout is energy looks interesting, although I think it's news driven, so I'm a little bit more careful. Um, and we'll see what shows up on the further analysis. Looking at the stock scanners, let's take a look at the mags to start. I like doing that because I know so many people care. First, if you look at the heat map on the S&P 500, it's pretty darn strong, isn't it? We'll start with Meta. Meta's at all-time highs. Meta looks great. Is Meta extended? Meta's at 59%. Nope. Relative strength and OBV. Would I be buying it here? I would have rather bought it here when it broke out. Meta is the leader in the market right now. What can you say? What a great story. Tesla. Tesla last week had pulled back, but it bounced where you'd expect it to at the 17-day moving average. Nvidia. This is one we're all waiting for. It keeps failing at this trend line here. It's in a bit of a wedge. I think the AI trade is starting to look interesting again, and it'll be interesting to see if this market goes higher, if Nvidia breaks out and goes to all-time highs. I don't think it's out of the question. Apple has got back above the 50 and the 17, a little bit of a pullback. I don't see any big momentum yet to take it higher. Does not look bad. Amazon has pulled back off of the recent recovery. Again, it's below the 17. Doesn't look like a lot of new momentum. AMD, which held this trend line multiple times, actually looks pretty interesting here, taking out the 200. It had over here breakout in volume on Friday. Relative strength and OBV look good, nowhere close to extended. Who am I missing? Netflix. Netflix looks a lot like Meta, just off all-time highs, doing very well. And then Google, trying to figure out what to do with Google. It's sort of consolidating here after breaking above the 50. So clear-cut leaders in these guys is obviously going to be Meta and Netflix. And Nvidia, that's the one I'm watching. I actually have a fairly substantial long-term position on my long-term accounts. I sometimes ride things down. Feels pretty ugly on the way down, but their long-term charts or accounts for a reason. I'm hoping to see a breakout. And then Microsoft, which is the red one, sitting down on the 200, might turn out to be a great place to buy, but I don't think so. At least not yet. Wealth Scanner. Give us a sense of what's working now. It's a basket of ETFs. They've added seasonality here. I look forward to hearing Rob talk about using it at the meeting. Leading is China Large, Space, Robots, China, Hong Kong, China, China, Infrastructure, Development, Global, Lithium, Social Media, and that's the last of the 800s. So a lot of emerging markets and China stuff is still here. We'll look at that. The question is any of that something you could buy? Because kind of look at this. Would you buy this up here? Might turn out to be a good purchase, but the high-low jump is at 96%. That's extended. It's run from 26 to 35 in a couple of weeks. Not normal movement. Obviously, a big liquidity event was occurring in China. Let's look at CAT scanner, and let's start by looking at China and see if anything shows up as being potentially buyable here. And my guess is probably not, but maybe I could be surprised. Yeah, Ehang Holdings was one, so technically it's a laggard because it still hasn't had a big move, but it broke out of this level here. Massive volume the last several days, especially on Friday with breakout momentum, not extended, relative strength and OBV look good. And it got Rob's launch indicator. So Ehang looks kind of interesting. East West Bancorp, nice coiling area here, sort of breaking out with momentum from a squeeze, decent relative strength and OBV. That looks good. Genpact, I didn't even know this was a Chinese company. Pull back after a big move up. Sally Beauty Holdings, they must have a big market in China. Z-Lab was one that I'm watching and actually talked about last week. And this is a biotech play that has a number of products that are being brought to market in the U.S. by others. And they had a nice breakout with the rest of the Chinese stock. And this one, it's extended by high jump, but when it's so close to the 200, I don't pay that much attention to it. Rel strength and OBV look good. And Z-Lab is one that made my list. So there were a couple of Chinese stocks that looked interesting. Let's look at financials from a high-level perspective. SoFi Technology. Now this is a cheap stock. I think that overplays the volatility. So let's pull it back here. And what you see is a bit of a breakout here. And the last time it closed this high, you got to go all the way back to this week here, which would have been in March. Great volume, breakout momentum, not extended, relative strength in OBV. This is on my buy watch list. Apple Hospitality got a big upgrade over the weekend. I'll watch for it to take out the 200 before I start chasing it. Bank One, nice pattern, base for a while, an EMS signal, decent volume, breakout momentum, not extended, relative strength and OBV look good. There's your East West Bank again. FIS, Fidelity Information Services. Nice run up, a little bit of a pullback and a breakout above the 17. I like that here. FTI Aviation has just been a beast. You could see we talked about it back here. So there are some things. Now let's see if I have one for insurance, because I bet I do. Now in the insurance, not a lot of them are showing up here because they've had big runs. But for example, Hartford Financial Services, HIG, big uptrend, sideways move. And here we've got a good volume breakout momentum from a squeeze with relative strength and OBV turning up and a big bullish engulfing pattern. I like that one. So now let's go into the combo list, which is a list of stocks that made it to somebody's interesting buy watch list and supplemented with a lot of different scans that I run. So this is a way to look at sort of the broader market. Previously, looking at the financials and the insurance and Chinese was going where the strength is in the market right now, what would be described as a top-down approach, which is my favorite approach. I also will look at a bottoms-up approach, and I'll rank them by dots. So Barnes Group had a massive breakout on Friday. Don't know much about them, but it's a pretty impressive move on massive volume, and it doesn't look like it was earnings, because earnings don't look like they're out yet. So there's probably news there. So Barnes Group, might put that on a list. Proficient is a takeout. Silvercrest is a silver play. And low cost, massive volume. I wonder if they had earnings. No, the earnings were back here, and the earnings were not so good. All right. E-Haggings was that Chinese stock we talked about. Steak Shack, nice move on Friday with the wealth signal. There's Sophie. VFC is a VF Corp. Looks pretty good here, but if you tighten it up, you'll see it's come down from a long, far away. But it's a apparel, clothing, sports, jackets, etc., making a nice steady move here. Had a volume breakout momentum, recent squeeze, good relative strength in OBV. Notice we're finding lots of things that we can buy. ACI worldwide, uptrend, sideways breakout. There's just a bit of a cup and a handle and a breakout. Breakout momentum, relative strength OBV look good, not extended. We looked at Bank One, looked at FIS. Health Equity, another interesting chart here. You could argue it's been going sideways for a while, had a wealth signal, took out the moving averages on decent volume, breakout momentum, recent squeeze, relative strength looks really good. ServiceNow, Kramer said this is a great play on the AI world, whatever. Beautiful uptrend pullback and took out the 17 on breakout momentum on Friday, not extended, good relative strength, good OBV. Prudential is another stock in the insurance group. It's off its highs but had a nice move on Friday. Shopify breaking out to recent highs. This is one of the better looking stocks right now. Team Altesian. I like the setup here, although I don't like the fact that it's below the 200. And then there was Deckers. big uptrend, pretty deep pullback, sideways move in here, and a breakout on Friday on decent volume, breakout momentum. Look at relative strength in OBV, not extended. And where do you buy the Deckers? You might buy them at Dick's Sporting's Good. And look at this one just sitting right on the 50-day moving average after a pullback. And let's see if there's anything going on down here. Momentum in a squeeze, something you might want to follow. Let me look at my buy watch list and see if there's anything else here that I thought was worth presenting to you. We've been doing this now for 35 minutes, and think of how many stocks we looked at, how we found some great looking stocks using the tools, which is why you have tools, and assess the status of the markets. So when I call it my buy watch, it doesn't mean I'm buying them. It just means I'm putting them on a watch list so I can watch them in the watch list. ACGL is another insurance company, kind of a high base, so more fraught with failure, but breaking out here with breakout momentum, relative strength, and OBV look fine. If NVIDIA goes up, I think Astera Labs will follow. This is an IPO in the AI technology space. If you like pullbacks sitting on support, Abercrombie and Fitch, a name that had a massive markup period, pulled back hard to the 200, actually took out the 50-day on Friday, breakout momentum, relative strength and OBV look good. I like that. Insurance is working so well that you actually have a buying signal coming in on Berkshire Hathaway B. You had a wealth signal, decent volume, breakout momentum from a squeeze, relative strength and OBV turning up. Celebrate was one that I bought down here and I still have. Beautiful run up, getting ready to set up again. Fresh Pet, I think my wife shops there. Not for me, for our puppy that we share with my daughter, or buys some of their food, I should say. I don't think you can shop there. Pull back to the 50 and breaking out. I mentioned banks as well. I mean, sometimes free parking is a good place to load up on quality stocks. Here's JP Morgan with volume breakup momentum from a squeeze with relative strength and OBV perking up and not extended. Bank of America will look very similar as well. Make My Trip is an Indian travel stock. It got a little extended here. It did what extended stocks do. It pulls back. And now it's sitting on the 50 with a pretty nice looking candle, relative strength and OBV turning up. I don't buy a lot of Bitcoin, but I often will buy derivatives of Bitcoin, and one of my favorite is MicroStrategy. This thing had a recent massive split, I think 10 to 1. It's coming up to an area that it has resistance at, but if it breaks out above here and Bitcoin moves higher, that might be something to consider. And then Powell, just a great stock. You can see we were evaluating it back here. Broke out, nice run. Probably getting a little extended. And another one of the regional banks as an example is Zion. A lot of these had big runs up, pulled down, it took out the 50, and you could see with the breakout momentum from a squeeze. So it is now 40 minutes or so in, a little bit less than 40 minutes. Just to remind everybody, there is a good chance that I will be less active over the next 2 weeks because of travel. I also like to call out the stocksanddocs.com site as a place to go ahead and watch what I do. And now, of course, it's working. Oh, that's because I got it. And don't forget the Wealth 365 event. I won't be there, but you know what? Wherever I am in this world, I'm probably going to be watching. And those that are Wealth Charts owners know that they actually record the Wealth 365 events, and you can go into your portal and go into home page, and you can go into, let's get the education, just to show you where you can find them. always good. All right, so it's probably under TV. Charts TV. Let's just put that right here as well. And you can find all the different things that you're entitled to. Here's the July wealth charts, and you could somewhere where you'll find my ugly mug, because it is not a good picture, but it's the picture they have. But I don't remember which day I spoke, but my presentation is in here somewhere as well. So hope here I am on swing trading the markets, my simple approach while trading full time. Have an awesome week in the markets. CPI, PPI, put on your seatbelts.